adult population, that is around 1 billion people, do not use or are excluded from financial services. The microfinance sector addresses this group. As Asia forges ahead and claims a larger share of world growth, its ability to achieve its full potential will depend to a great extent on the speed and success with which it delivers economic empowerment and achieves financial inclusion. Both governments and financial institutions around the world are recognizing the imperative of serving the unbanked and the underbanked. Very clearly, bringing more and more people, including them into the financial sector, will create both sustainability and transparency in the financial system. This is why the theme of this conference and its focus on financial inclusion is so timely and important. As many of you know, Citi's involvement in the microfinance sector started long back, almost 30 years ago. In Asia alone, Citi Foundation has committed more than 22 million in funding for microfinance-related projects since 1997. Many of these programs are designed to support the development of the sector as a whole. For example, over the last 3 years, we funded the Citi Network Strengthening Program, which has improved the operational, technical, and financial capabilities of 12 microfinance networks. 4 of these are in Asia, including our regional microfinance partner, Banking with the Poor Network. As a result of this program, the 4 Asian networks increased their membership by 15%, and their members reported 14 million new microfinance clients and an increase of 11 billion in their loan portfolios. We also fund pilot programs to promote innovations in microfinance. For example, a microcredit water and sanitation improvement program in Vietnam, which is being expanded to 700 households this year to meet increasing demand. As a reflection of the growing interest in microfinance in urban settings and in developed economies, we announced last week that we are going to fund a feasibility study for the introduction of microcredit to low-income adults in Hong Kong. For Citi Foundation, and I'm a member of the board of Citi Foundation, microfinance is one of the key objectives of the foundation. And I'm pleased that my colleague, Graham McMillan, who is a Citi Foundation program officer handling microfinance, is with us in Colombo today. Another part of our commitment to responsible finance is demonstrated by the microfinance group. This global business unit provides funding access to capital markets, savings, remittances, and insurance products to more than 100 MFIs, network, and investors in over 40 countries. In Asia, this includes an increasing number of deals in Bangladesh, India, Philippines, and Sri Lanka in the near future. You will hear from 2 of my colleagues, Philip Brown and Anuratna Chadda, more about this in the coming 3 days. In addition, our commercial involvement in microfinance is reflected in our sponsorship of the Invest Asia Marketplace on Thursday afternoon.
Stand by 1.
In closing, I want to take this opportunity to compliment and thank our partners, FDC and Banking with the Poor Network, for their dedication in making the forum one of the most significant microfinance events in the region. I would also like to thank our co-sponsor, Hatton National Bank, for their extensive support, and all the other sponsors, partners, and organizers who have helped to bring this conference to a reality. Once again, ladies and gentlemen, a very warm welcome to all of you, and my best wishes for what I hope will be a successful and a very fruitful 2 days, 3 days in this vibrant and beautiful country. Thank you very much.
One line. Stand by 2.
Thank you, Mr. Apte, for sharing your thoughts with us this morning.
One release.
Ladies and gentlemen, we progress straight away into the opening address at this conference. And we have with us to make that presentation an extremely distinguished gentleman. It is my pleasure to introduce him to you. Mr. Priyantha Fernando, the Deputy Governor of the Central Bank of Sri Lanka.
All stand by.
Mr. Fernando graduated with a Bachelor of Science honors degree from the University of Peradeniya and proceeded to complete his Master's and MSc in Statistics at the University of Birmingham in the UK. He has been a career central banker, if I might call him that. Having launched his banking life at the Central Bank of Sri Lanka, he served as Additional Director, Statistics Department, Director, Information Technology, and Assistant Governor prior to his appointment presently as the Deputy Governor. He serves at this time as the chairman of many related bodies. For instance, the chairman of the Institute of Bankers of Sri Lanka, the Credit Information Bureau of Sri Lanka, the Steering Committee for Establishment of Common Payment Switch for Sri Lanka to facilitate interbank payments for retail transactions, the chairman of the National Payment Council as well. He is also an ex officio member of the Insurance Board of Sri Lanka and a member of the Securities and Exchange Commission of Sri Lanka.
Stand by now.
Interestingly, he project managed the implementation of the RTGS, the real-time gross settlement system for real-time settlement of interbank payments and settlement of government securities issued in scriptless form. In addition, he was also a member of the task force in implementing the check imaging and truncation project in Sri Lanka. I believe, if I recall right, Sri Lanka has been a pioneer in these areas of real-time transactions, being amongst the second or the third in the world to implement them. Ladies and gentlemen, please welcome Mr. Priyantha Fernando.
Good morning to all of you, and thank you very much for that kind introduction. Mr. Chandula Abevikrama, Chairman, Banking with the Poor Network. Mr. Suresh Apte, City Asia Pacific. Mr. Craig Wilson, Executive Director of the Foundation for Development Cooperation. CEOs of banks and financial institutions, my colleagues and ladies and gentlemen. It's a pleasure and privilege for me to address this forum of Asia Microfinance, where a large number of personnel from foreign countries have also gathered. And talking about micro entrepreneurs, they play a vibrant role in any economy, and more so in a country like Sri Lanka, where the majority of the population lives in rural areas and where the informal sector of the economy is quite large. In today's context, micro enterprises are of special importance, both in employment creation, poverty reduction, or improving the livelihoods of households. In some cases, the micro enterprises, though have started in a small way, have grown over time into large corporate entities. And there are quite a few such interesting cases in Sri Lanka where these micro enterprises have elevated themselves into medium and large enterprises. But overall, the micro enterprises sector has to contend with several obstacles and challenges, and most important of which is, as we know, the limited access to credit. However, the situation in this regard seems to be improving now, in that the growing and aggressive competition for lending opportunities have led to increased interest in exploiting the potential available in the microfinance sector. It is also noteworthy that against this background of growing global recognition of microfinance as an instrument of inclusive economic growth and poverty alleviation, and the resultant increase in funding and other support for microfinance activities, Existing financial institutions are expanding their microfinance operations and outreach, and new microfinance institutions are coming into existence. The trend is very clear in Sri Lanka, especially after the end of the 30-year North-East War. Whilst this is a welcome development, it needs to be properly guided and controlled if the desired results are to be achieved at the national level. The existing regulatory and supervisory mechanism is currently not adequate for the purpose. At present, the operations of the microfinance providers are controlled in different ways by different government authorities in Sri Lanka. This is not a situation conducive to the healthy development of the microfinance business. While the expansion of microfinance activities and formation of new microfinancial institutions should be encouraged, the interest of all stakeholders need to be protected and sustainability should be ensured so as to attain the envisaged goals. With these objectives in mind, the government has taken steps to enact the Microfinance Act, and I know many who are interested in the microfinance sector is looking forward to the coming of this act. Under the proposed Microfinance Act, a microfinance regulatory and supervisory authority will be established in order to perform the functions and responsibilities of licensing, regulating, and supervising the microfinance companies. The non-government organizations, cooperative societies, and other entities engaged in microfinance business. This act defines microfinance business as accepting deposits and providing financial accommodation and other financial services mainly to low-income persons and micro-enterprises, and provides for the microfinance authority to determine the eligibility criteria for low-income persons and micro-enterprises from time to time. As per this act, the microfinance institutions will be authorized to provide credit for different types of economic and trading activities, and excluding, of course, foreign exchange transactions. Housing will also be an eligible activity for providing microfinance credit under this act. Apart from lending and deposit taking, microfinance institutions will also be permitted and encouraged to provide various other ancillary services, including storage and safe custody facilities, hedging facilities, investment advice, and other advisory and training support to micro enterprises. The Microfinance Regulatory Authority and Supervisory Authority will also have powers to determine various parameters of the microfinance institutions and their operations. Minimum net assets and the minimum ratio of liquid assets to be maintained by MFIs, types and maximum maturity of investments they can make, maximum customer limits applicable to deposits and advances, upper limits for maturity and interest rates for advances and deposits, and maximum charges or rates of commission applicable to services are some of these parameters to be fixed by the proposed microfinance authority. Microfinance institutions will be required to maintain a reserve fund and a deposit protection fund in the stipulated manner. The minimum prescribed ratio of credit allocation for low-income persons and microfinance enterprises will also have to be maintained. With these and other provisions, the proposed Microfinance Act seeks to strengthen the microfinance sector and to ensure the healthy and viable growth of all microfinance institutions with professional, prudential, and transparent management so as to protect and further the interest of all stakeholders and to achieve greater financial inclusion. One of the major factors adversely impacting on the availability of credit to microenterprises is the collateral-based lending approach generally adopted by banks and other lending institutions. Generally, microenterprises